Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. And how are my sheeps doing? How are the bulls doing? Bulls, you guys feeling good? Are you guys feeling very euphoric? How about bears? Bears, are you guys starting to want to become bullish now? All right. I asked these not to make fun, but there's a reason. All right. There's a reason because we are hitting very, very critical levels here on the SPY. I mentioned to you guys, I have fib levels from all-time high down to the October low. So this fib level is based on this downtrend structure. The 61.8 fib level is at 429.61. We call this the golden zone based on math. And guys, we're just few cents away from testing it. So if you are a bear and you're considering maybe I should go bullish right now, maybe your favorite YouTuber is starting to question his bearishness, guys, be very careful getting bullish at critical resistant levels. All right, we don't get bullish at critical resistant level. You might as well be trying to go long at the top. You get what I'm saying? So I'm not saying that SPY can't go up higher. It possibly can, because this market does what the hell it wants to do. It don't care what's happening in the outside world, apparently, right? I'm not saying it can't go up. We'll follow the price action if it does. But all I'm saying is, as far as longs and calls right now, the edge for them is not, it's dropped a lot, okay? When we were at lower levels based on this pink structure or breaking out of this triangle pattern that I have here, the edge for longs were a lot higher. As of right now, when we're testing critical resistance, the edge for longs or calls is a lot lower. All right? So be careful going bullish now when we are at critical resistant levels, because that's where the market makers, that's where they love to take profits. Okay? Not only is this zone 429.6 to 430, this zone not only is the 61.8 fib level, but remember back in August 22, you can see right here, okay, had a lot of selling pressure there, all right, which led to a very beautiful move to the downside. Remember how many people were bullish at this time? Some of your favorite YouTubers were probably bullish at this time. Not Uncle Charles, I'm a sheep. But there were some people bullish, and then what the market do? Bam! Am I saying that is what's gonna happen again? Without a shadow of the doubt? That's not what I'm saying, because I don't know what's gonna happen in the future. And a lot of people act like they can see the future, but they can't see the futures. Don't make no common sense. But what I do on this channel is I give you the trade setups, so you know what to look for if the market does decide to drop or if it continues to go up. That's what I do. I trade like a sheep, all right? There are not many sheeps in this world, all right? I'm not talking about the actual animal. I'm talking about the traders. There are not many sheep-style traders in this world. There's mostly bulls and there's mostly bears. That's what the majority does. But I like to do what Robert Frost said and take the road less traveled by, especially in the stock market, especially when most retail traders, 90% plus, lose. You don't want to do what everybody's doing. So if everybody's becoming either a bull or a bear, you need to come up with a different mindset, because obviously that other biased mindset doesn't work. So we trade unbiasedly in Uncle Charles community on my channel with this unbiased price action analysis. All right. So if I say something bearish, it's not because I'm a bear bias trader. It's because we're hitting critical resistance. As I said, all I'm saying is to be careful. So if we do drop, as I always say, we need to see a support level fail, all right? I've been talking about how awesome the false breakdown setup is, okay? The false breakdown setup is the greatest trade setup of all time, and it works on many different time frames. But I'm going to explain it to you guys in the daily chart time frame, okay? And maybe the 4-hour chart time frame as well, because this is the number one greatest trade setup of all time. Number two is the false breakout But number one is the false breakdown, because statistically speaking, right, if we zoom out on the SPY, right, I know, like, we zoom out, we look at this chart. Overall, in the bigger picture, the market has been in more of an uptrend than a downtrend, okay? Higher highs, higher lows for the last few decades. So obviously, based on that, the false breakdown statistically is the greatest trade setup of all time. Number one. Number two is the false breakdown, the false breakout setup, excuse me. So as far as the false breakdown setup, you guys can see here, based on my pink trend line, all right? We had a structure here, test here, all right? And we look on the 4-hour chart, we'll see more tests. We'll go to the 4-hour chart, okay? You see how many tests of this pink trend line? 1, 2, 3, 4. We broke down. This was in May 24th to May 25th. We broke down the pink trend line. And what happened? Broke it down on May 24th. Later that day, we recaptured. May 25th, we recaptured it. Tested it as a support to confirm the recapture. Right? False breakdown setup. Boom. Beautiful. And it led to the breakout of this triangle pattern. Led to a beautiful move to the upside. But when it came back to the retest as a support to confirm the breakout, what did we get? We got another false breakdown. All right. Do you guys understand the false breakdown? We get a close. It's when we get the candle close below the support level, right? In this case, it's triangle pattern. You see this candle, May 31st candle, it closed below, back below the triangle structure. And then the next candle, it closed back above that candle structure. That's a recapture. And then this candle right here on June 1st, you see how it back tested and bounced off support of the triangle pattern as support, had a lot of buying pressure. That confirms the breakout or the recapture. And it led to a beautiful move. Right? You want to enter on the recapture. Enter on the recapture. False breakdown setup. Number one greatest setup of all time. And it worked amazingly well this past week. Okay? The false breakout is when we clear a resistant level. Okay? So in this case, I have 429.6. That's the green line right there. Okay? So I got another support at 427. Okay? That white line right there. So we got a breakout of 427. If we go back on a smaller timer on the 15-minute chart, you can see here, we cleared 427 and back tested it as a support before we head up higher. So the market recognized 427 as a certain level. You can see here intraday, I had a 425 level. Remember in the previous video, guys, I mentioned to you guys the 425 level. Look at this. Look at that. Beautiful. False breakdown. This candle right here, 945, closed below 425. And then the next candle, this on a 15-minute chart, intraday, recaptured 425. False breakdown setup works on smaller time frame as well. But the point is that 427 level was recognized by the market as a level, right? So now that we got the clearing of it, bulls need to hold 427 and 425 as support. Okay? Orange line. If we break below it, if we get a close below 427, that's a false breakout based on that level. If we get a close below 425, I would trust puts even more because that's a double false breakout. Okay? It's much safer to trade with the trend. False breakdown setups work great when the trend is bullish. They can also work well when you're trying to catch a reversal. All right? Not all false breakdowns lead to reversals, but all reversals started with a false breakdown. The same thing with the false breakout. Not all false breakout lead to reversals, but all reversals, all bearish reversals started with a false breakout. So we need a false breakout. It needs to close back below 427 425. That will put lower price targets in play. You see how we cleared 423? If it break back below 423, that's a false breakout setup. Do you guys see why I like to say short when support fail? We're using the small time frame, 15 minute, 30 minute, to short breakdowns of support or long breakouts of resistance. But a lot of time based on the bigger time frame, 4 hour, daily, weekly, these are false breakout, false breakdown setups. Beautiful setups that happen a lot. Okay, and we want to play it level to level. Level to level takes the greed out of it. Play it level to level. When it hits our level, we take most profit. So if you was to short 427, for example, you want to take most profit at 425 and then leave runners with your stop loss at break even or slightly in profit. Okay? You take most profit at 425. If the market bounced from 425 and recaptures 427, you're going to be green because you already took most profit at 425 and your runners will get stopped out on break even. If the market breaks down 427 and you caught it, take most profit at 425 and then it breaks down 425 and keep going, guess what? Your runners will catch the move. You can also add to your runners because a lot of people like to add to their losers, but for some reason don't add to their runners, to their winners, which I think is much better. Does that make sense? You got to understand Uncle Charles' strategy. Level to level. My favorite setups are the false breakdowns and the false breakout setup, but the false breakdown is the number one setup. All right? Better to trade with the trend, but if you're not going to trade with the trend and you want to try to catch reversals, don't do what amateurs do and call tops and bottoms. Play the setups and tip the probability in your favor. Okay? Yes, it does require work. It requires a lot of patience. It requires a lot of skills. But you can't expect to be a great trader unless you have some skills. It takes a lot of work to make it with trading. I believe we all have the potential to do it, but we got to learn to be unbiased, learn price action analysis, learn price action, how to trade it, the setups, false breakout, false breakdowns, breakouts of structures, Fibonacci levels, smart money concepts, gaps. They're all under the umbrella of price action. There's a lot to it. It would take me 5-10 hours if I was to get really in depth with these analysis to make a video. Okay? I just try to simplify it for us so that we can all understand what to do so we can make money. If you're bearish, you want to see breakdowns of 427 and 425. Play the false breakout setup, play it level to level. I got 423, 423, okay? And I got 420, 418.2, 417.5 as support level, okay? 417.5 will be very critical based on this pink trend line that I have here, okay? But play it level to level. Watch for the setups. False breakout, that will be need a breakdown of support. Play it, all right? If you want to swing the runners. Swing the runners. Now, if you're bullish, you want to see either another false breakdown setup or support defend, all right? Because when the market goes up, it doesn't just go up all the time, right? It pulls back, okay? So, for example, if the market keeps going up without pulling back, you can look to long 429.6 breakout to my next target around 431.5-ish with 433 above. Okay, above 433, I got 435 and 437. All right, $2 increments. But if the market pulls back and it breaks down 427, you can either look to short, just play the price action, or even scalp it. Or maybe you just rather just play the bullish setups. You can wait for the support to break down, all right, and wait for a false breakdown setup. So if it breaks down 427, you can long when 427 recapture. If it hits 425 and bounces and then recaptures 427, you can look to long. If it breaks down 425 and then recaptures 425, you can look to long. Play the false breakdown setups. They're the only setups that I really trade if you think about it. Okay? Now remember, if it's a false breakdown, you need the candle close, at least one candle close below the support. And then you need a candle close back above that support. More than one is better, obviously. All right? And that's your trigger to go long. If you're playing a false breakout, okay? Look at an example of a false breakout right here. This candle right here on May 19th. we cleared 420 on May 19th, and then the next day or the next morning, right, we closed back below 420. We even back tested 420 as a resistant, giving us the roll change, back test and go to the downside. You see, this is a great example of a false breakout setup right here. Close above resistant and then breaks back down that level. Couldn't hold that support. That's a false breakout. All right? These are not strategies that Uncle Chartist made up. All right? I learned these from books that I read, from other YouTube videos, from my mentors. Uncle Chartist is not reinventing the wheel here. I'm only sharing with you what, strategies that I found to be useful, and I'm trying to explain it to you why it's useful and how to trade it. And these are some strategies that some of the best traders in the world uses as well. And I encourage you guys to stop being bull bias and bear bias and be sheeps. You can be bull leaning, you can be bear leaning traders, but on the foundation of your trading strategy, you as a trader should be of a sheep. We follow the price action, not blindly, skillfully. Okay, let's move on to the triple Q. Triple Q, same thing. Given just pop into the upside and it hit, critical levels. We cleared that 61.8 fib level. We cleared the golden zone. All right, based on the downtrend structure. Okay, I have fib levels from the all-time high down to October low. The 61.8 fib level was at 349.7, and we closed above it. All right. Got a lot of lines here, I know, but I'm trying to explain to you what the lines are, so don't be too confusing. So yeah, around my level I got around for resistant is 355 to 356 zone. We'll round it to 356 because of Friday's high was around 355.8. So obviously, if we want more upside, it's gonna have to take out Friday's high at 355.8. Preferably 356. Now there is a gap. All right, the start of the gap is at 357, well 356.8. We'll round it to 357. All right, it's a zone anyways. All right, it's not pinpoint accurate. A lot of these support resistance levels are zones. You got to give them some buffer. But yeah, obviously above 355 to 356. The start of the gap for triple Q is around 356.8. We'll say 357, and it closes at 361. All right, so that would be my target, the gap fill for triple Q. All right, 357 to 361 zone, but it will have to defend 353 on any pullback. We had some selling pressure there last Tuesday and Thursday. It'll have to be hold that support and clear 356 to trigger more upside to go fill that zone. All right, remember the false breakout. If you're bearish, wait for breakdowns of support. Play the false false breakout setup. Otherwise, watch for breakouts of resistance. Watch out for the false breakdown setups. Okay, 353 fails. 351 and 349.7 would be back in play. Below 349.7 is when I would swing puts, because we recaptured and cleared. That's a critical resistance level based on the 61.8 fib level, right? So we lose that level. Because it's such a critical level, that is when I would swing puts to play that false breakout setup. This is going to be on, it should be a great trade if it happens. If it pulls back because the market pulls back and that level defends our support, watch for a false breakdown setup. If it breaks down 351, watch for the recapture. Stuff like that, okay? This is how we trade price action using support and resistant levels. IWM at fib level from all-time high down to October low. IWM got a close above that 23.6 fib level, which is at 181.8. As long as above 183.3 and 187 are my next targets based on the fib level of a smaller downtrend that I have here, okay? But if you want to be bearish, like I said, false breakout setup, it needs back below 181.8 and definitely needs back below 179.6 to put lower price targets in play. 177. There's a gap fill around 175.5. Break that down, break 175. That's fib level as well on a smaller trend. It will be very bearish below 175. All right. Wait for false breakout setups. Otherwise, to be bullish, I need to see 179.6 to 180 zone hold on any pullback. So if we pull back and we bounce, find buying pressure there, that would be bullish. It'll need to recapture 181.8 to put higher targets in play, obviously, okay? Tesla also hitting critical resistance level, right? Like I said with SPY, the edge for longs are, is dropped a lot. The edge for longs and calls. So you gotta be very careful getting bullish at critical resistant levels. All right. So yes, 214 is a resistant level. We broke above it intraday, but did not close above it. Bulls need to close above, clear it to put 217.6, 220, and 223-ish in play. Okay, so above 214, 217.6, you could possibly see higher targets. Don't argue with the price action, guys. Just go with it. Now, if we're going to get bearish, wait for that false breakdown setup. I need to see a breakdown of 210. Breakdown 210, I would be bearish. Okay? With 207.5 in play first, 204, and then the 200 daily moving average, which is around 198.3-ish. Okay? So below 210, bearish. Above 214, the uptrend continues. Apple, we cleared 179.3. That was a previous pivot high. It managed to get as high as 181.78. Guys, all-time high is at 182.9-ish. We're just a few cents away. If it clears 180, this high right here, 181.78. If it can clear that, we're likely heading to 183 or higher. And if we do that, that's going to be a new all-time high for Apple. A lot of people talk about a bear market, but Apple don't give a damn about a bear market, apparently. But if we're going to drop, I need to see a breakdown of 180. You can short the breakdown of 179.3 as well, but I would short 180, probably a better shorting position, get you more profits. And below that, that will put our favorite 178. And then the gap fill, well, it's not a gap fill yet, but it is a support around 176.5. And then the gap fill is at 175, okay? Orange trend line, orange trend line is at 174.4. Overall, as long as above that level, Apple is still above that level. It could have some pullbacks and retests of that trend line. But overall, bulls are in control above this trend line. If bears want to take over and tip the balance back in their favor, they need to break down this structure. They need below 174. And that is when bears will take back control. NVDA had some great trades with NVDA. All right. If I go to my Discord, I have a room here called TA Requests. All right. This is for my tier 3. And tier 3, my members, they can ask me for trade setups on any chart that they want, and I do my best to try to give it to them, okay? Now, one of my Discord member, a tier 3 Discord member, her name is Fufi. She asked me for TA on NVDA. I wouldn't say I really gave her TA. I kind of just gave her trade ideas, actually. I don't know what came over me. She asked for TA. I gave her a trade idea instead. I said short below 399, long above 42.7. Try to keep it simple. All right, break down 399. We look to short. Breakout 42.7. We look to long. You guys can see here. This fib level, 38.2 fib level was at 399, and we broke it down on Friday. Look at that amazing move. Boom! Big move to the downside. All right. And keep in mind, if you're a tier 2 member, I wrote it in trade ideas. All right. I wrote it in trade ideas. I gave you the update intraday. Mentioned the short 399 or short 395, and I had lower price targets in play. I think 1 or 2 of them got hit. But NVDA has so much volatility, it's hard not to trade it using Uncle Charles' trading system. It's that combine that with the volatility level to level with runners, it's just hard not to be profitable with this. I love it. Okay, it gives me Tesla vibes from 2020. Not quite, but you know, volatility wise, it was amazing. So, anyways, you guys can see here that it's basing at my 50% fib level around 392.88. It did close below it, so that is a good sign for bears. Okay? Keep these levels in mind because the market can gap up, gap down, and change. All right? But if you have the uncle support and resistant levels in your charts, you'll be able to adapt, right? Because you have your own charts to look at. Okay? So as long as below 392.8, I would be bearish. 390.5, please add that to your chart. 390.5 would be in play with 389 below and 386.62. All right, if the market gaps down around those levels, just wait for the next setup. All right, break down support, breakout resistance, whatever happens. Now below 386.6, I would be very bearish. That's my 61.8 fib level. We short the breakdowns of support or we short false breakouts. Okay, so use these levels, watch the setup, use a 15 to 30 minute chart, and just play it level to level. All right, now that's the bear case scenario. Needs to break down support. Below 386.6, I have 385, 382, 380, and 377.7 in play. Okay, now there's some people talking about a head and shoulder or a lopsided head and shoulder on this on NVDA. I would guess that based on this, the neckline's around 377.7. Very bearish if that support fails. Now, if NVDA bounces, I trust bounces only if it clears resistance. It will have to recapture 392.8, give us that false breakdown setup. I got 395 as a resistance. If it clears 395, 397.6 and 399 would be back in play. Above 399, I would be bullish because it would cancel this breakout we had last Friday, okay? And with 399 cleared, I would favor 402.7, 404.8, we'll round it to 405, and 406.88 in play. Okay, we'll play this level to level. If you guys are not good at risk management, please don't trade NVDA. If you are good at risk management, then go for NVDA. All right, this market's either gonna make your account blow up in a good way or it's gonna make your account blow up in a bad way. I'm sure you guys know what I mean. Now the VIX here closed below the lower Bollinger Band. Yes, VIX can close below the lower Bollinger Band, although that's not it's not quite it like I said with the edge thing. If you're trying to short the VIX, the edge for shorting the VIX right now, it's very little. All right. The last time VIX was closed outside the lower Bollinger Band like this was Friday, January 13th. It was Friday 13th of 2023, earlier this year. Okay. And the VIX did give us a bounce, but it ended up being a dead cat bounce in the short term. So be very careful if you're looking to short the VIX because it could look to bounce. I need to see it recapture 15.5 and 17 to be bullish. Give us that false breakdown setup, VIX. And if the VIX is bullish, giving us false breakdown setup, we could get some false breakouts on the SPY. All right. Now, just because it closed below the Bollinger Band, the probability of it bouncing is higher, but it doesn't mean it has to. Remember, the market's going to do what it wants to do. All right. People say the market is manipulated. Well, Uncle likes to think that it's managed. All right. It's managed by the market makers. All right. And the market makers, they're going to buy and sell to whoever. They're going to set the price spreads to whatever they choose to do. All right. So don't think it has to bounce. It can bounce, and the likelihood of it bouncing is great. There's more of an edge to longs right now for VIX than shorts. But just keep in mind, it doesn't have to do anything. All right? But if it recaptures 15.5, that would be a good sign of some bullish strength. If it bases, it's probably building strength for more downside or upside, obviously, but we'll need to see the break of the range and allow VIX to give us a range. All right? As of right now, the low of this candle is at 14.4, which means if it breaks down 14.4, it could possibly go down lower. I have support at 14. Okay, guys? Here is the dark pool. $2 billion worth of premium at the 421.8 level, and the market is just pumping. So it's either these were buys and market makers were selling to market movers, which is whales and stuff, or it could have just been profit taken. All right. We don't know, but that's why I use price action. So what this means is 421.8, I'll put it on my chart as a dark pool level. I will definitely get bearish if that level fails as support. That's how I trade dark pool levels. All right. Otherwise, I'll be using my other levels, other pivot levels as reference to trading. All right. Option flow. Going for the SPY. We'll filter it for 500K premiums or above. And I'll look for expiration date for 1 month out. All right. We'll look at it from the short term. And it's still bullish. If we look at it from all expiration date, it'll be bearish, but it's always bearish. So when we look at it from the short term, we get a different story. But short term, guys, we've seen a lot of sweep orders favoring calls. All right, for whatever it's worth, that's what the flows are showing. All right, and a lot of these entries were around the 427, higher 426 levels, like 426.69. A lot of 427, 428. All right, a lot of these were entered at the top of Friday, so I don't know if they're expecting more upside or what. Some of these are expired though, like these are June 2nd. So these are June 3rd. So June 3rd, June 16th. So the one that are valid still, they entered around 427, 426. And at this point, their calls are in the money. So I don't know if they took profits already. Okay. This is kind of also another reason why I don't like looking at the short term too much, because some of it becomes invalid. Some of them you don't know if they took profits already because they already hit in the money. All right. But, that's what I'll show for now. All right. If you want more, you can always, support Cheddar Flow and get yourself some Cheddar Flow. You can also join Uncle's Discord and get access to some option flow as well. But, even in the short term, it's overall bearish for QQQ IWM, bullish. All right, I don't really like this. Let me look at all expiration dates. Yeah, it's still overall bullish even with all expiration date. We've seen some block orders coming in. Okay, Apple overall bullish for all expiration date. Tesla overall bullish for all expiration date. Let's take a SPY one more time. Overall bearish. See what I'm saying? So short term it was bullish. Longer term it's overall bearish, but we're seeing split orders and block orders. QQQ overall bearish. Okay, and the VIX overall bullish. Holy moly. Oh, we gotta talk about this. This is a sign, guys. This is a sign. A lot of block orders. These are institutions entering. Majority is called. Guys, look at the size of these things. 34,000, 35,000. Guys, you guys, for the people that has been watching Uncle Charles' channel for a while, I know most of you did not watch till the end, but the people that do, when was the last time we saw something like this on the VIX? Holy moly, guys. There's going to be a big move on the VIX coming. If the VIX bounces, this could be a rug pull for the SPY. I don't know. Price action is a shepherd and it'll show us the way. But when was the last time we seen something like this on the VIX? So definitely worth noting. And I hope you guys found value in this, because I do. All right. And once again, guys, if you're still here, thank you guys so much for watching Uncle's video. This video might be a little longer than usual, but hey, we got to spend time together, right? Anyways, talk to you guys tomorrow. Enjoy the rest of your Sunday. Peace.